Hello everyone, happy to meet you all once again in this video. Welcome to the Vibe Trade Room. In my previous video, we have seen how we rode the trend over Titagar Wagons Limited and Fact. In this video, we're going to see about MazDock Shipbuilders or MazDock Dockyard. On my LinkedIn, I wrote on 5th of October 2022 about the stock purchase price of MazDock Shipbuilders, that is 30th of August 2022. With that in mind, let's jump on to the 10 holdings. We have completed Titagar, we have completed Fact, and now we're going to MazDock Dockyard. Here is a classic example of how I'm riding the trend. While anybody can argue, oh, you should have held the stock, you would have got a lot of profits, you should have not buy and sell often. Irrespective of that, I do no fundamental analysis. I'm busy at work, so I have no time to do any analysis. So all I'm doing is, based on my algo, I'm just riding the trends. So 30th of August, I bought some positions of MazDock Dockyard, and I sold at strength on 6th of October and 11th of October. The position is closed. After that, I bought it again on 1st of November, and then I exited on 6th of January, and then I bought it on 13th of June. This is the example of position trades riding over the same stock. Now let's look at the charts. This is the chart of MazDock Dockyard, and now I have marked it here. You can see that during the accumulation phase, large green volume candles. The stock is going up and down, lot of choppiness. The 50 moving average and 20 moving average chopping each other and then cutting 200-day moving average, and then there is a boom. You see, this is the resistance upon which the stock has never crossed, and then there was a breakout, right? And then it was supported with large green volume candles. That's a buying, right? Institutional buying. And then I bought a stock on 30th of August 2022 here, and then rode the trend. You can see that there is no large red volume candles, all green, and then sold it at strength over here. Let's look at it. I'll just try to move it down a little bit. Right. 6th of October 2022 I sold because I've made some good amount of profits. I want to lock that. And then the following days, 10th of October, there was a heavy selling large red volume candle, equal in size of the green, which means that got me worrying. And then that was also followed by a sudden drop in price. So I thought, okay, let's exit the position. We don't know what's going on really. So let's exit the position completely on 11th. So what I did in this trade, I bought it here. Let's say I bought the stock, let's say for 1 lakh, and then I sold 50 lakhs. I booked the profits, exited the position 50%, and the remaining 50% I exited here. So the trade was really good. And let's say I bought it here, and the first one was at 48 or 50%, and the second was somewhere around 50%. So a 50% profit is not bad at all, right? And then what happened is the volumes were tight. I mean, the volatility was getting tight and the volumes were drying up. I didn't know what to do, and I was just observing. Okay, there was no more large green candles or large red volume candles. So let's take a buy. Because you see the volatility, that is the stock price up and down movements were almost negligible. You can see the candles here. That was getting tight and tight. When the volatility gets tightened and when the volumes are drying up, that means something is cooking. Institutional investors are looking out to scoop more volumes. The moment they have scooped up all the volumes possible, the next day they will buy. When they buy in heavy volumes, the stock price, boom, zooms up, right? So what I did is I tried to take a position on 1st of November, right? And then the next day, my theory went well. It was right, and then the stock price zoomed up. Again, this is a manipulation. You can see that a lower volume red candle and then stock price dropping, right? So that's a manipulation. And then the next day, a large green candle followed by stock price up. So these are all manipulations, and then stock price was supported by 20-day moving average. And again, this day I got worried because the stock price, when the stock price is fueled by momentum, it usually stays about 20-day moving average, which is the green line. The moment the stock price came below the 20-day moving average, my algo is designed in such a way that it will trigger some kind of alert, like indicating you that, hey, you have to exit the position. And however, the volumes were drying up. There was not much volumes. And then came the stock price. In this area, whatever may be the volume drying up, I don't care about any kind of analysis. I would have exited the position. And then, however, I did not exit. Luckily, I exited the position here, because when such large price drop happens, especially below 20-day moving average, and then when it crosses below 50-day moving average, that's one sign a high momentum stock is going to topple. Usually when a stock price goes below with a large movement, let's say this one is as good as from here to here is 10% drop in a day. When a high momentum stock usually is flying high, this doesn't happen. This happens only when there is a manipulation or something that's going on in the background, and if I don't understand, I will exit the position. And then on 6th of January, I sold and exited the position here. Despite the volumes are getting tight, pretty tight, you can see that volumes, they were pretty tight, but then the stock price continued to fall, and then the 20-day moving average crossed down the 50-day moving average. That means the stock is losing momentum. And then the 50-day moving average acted as resistance. You can see that the stock price hit the 50-day, it cannot cross, hit the 50-day, it came down and then supported a 200-day moving average. Now that's a sign. When the stock is supported by 200-day moving average, it's an indication that the institutional manipulations are done and they will be starting it to buy, to buy the stock. Right? And that exactly happened, but that's not the point we should enter, or I will not enter at this point, because I'm not sure. I've not seen any large green candle, right? And then it happened, and then one large green candle. You see the stock price went up, the 20-day moving average crossed up, that is golden cross, the 50-day moving average, and then supported. The stock price got supported at the 20-day moving average, and then boom, one large purchase by some institutional investors, and then support. And then this confirms that the momentum is picking up. However, I didn't buy it here. You can see that what I did is, this is the resistance, and the stock price crossed the resistance here. So what I usually do is I wait for the stock to touch here, but it didn't happen. The volatility started to contract, right? So usually when it goes higher, it comes back, it pulls back and then touches the previous resistance and goes away. In this case, all our theories will not work in the reality, right? So what I did is I observed the volatility contraction happens. However, there are 2-3 large candles indicating momentum building up, and you can see that the 20-day moving average, the 50-day and 200-day all are starting to move up. That means when the volatility contracts, when the volumes dry up, supported by green large candles, 20-day, 50-day and 200-day rising up, it indicates time to buy. I got it on 30th of June 2023, and you can see that from 6th Jan to 13th June, almost 6 months, I sold the position, I exited the position. I do not want to suffer this pain of, getting stagnated here or getting manipulated by the institutional investors. So I also did not do any kind of analysis. So I would rather exit a position, lock my profits and wait for positive signs until the stock picks up momentum, right? And then you can see that there is a breakout that has happened here, and then the stock reached the all-time high price. And then when I bought it here, there is also one more breakout, and then you can see that the volatility starts to contract. So this is a classic flag pattern. You can see that I just want to try and draw here, but let me see if I can draw something here. So this is a classic flag pattern. comes like this, and then it comes like this. That's a flag, right? So you can see that the stock always continues to like go in a flag, right? It goes up and then the volatility contracts, kind of asymmetric or symmetric triangle where the volatility contracts and then goes up and then the volatility contracts. It might be possible that what you can do is add one more moving average, which is 9-day moving average, and see if it extends further. But to keep it simple, I wouldn't do that. I'll still rely on 20-day moving average, and currently my positions are open. I'm still holding on the position, trying to ride the trend. So what's likely to happen in the next couple of days or 3-4 days, the stock will continue to contract in volatility, and then when the institutional investors with large green candle come in, it'll boom up. So that's how we ride the trend. Hope you liked this video, and continue to focus on the trends. All you have to do is monitor 3 indicators: the 20-day, 50-day and 200-day moving average. Whether exponential or simple, stick to it. There is nothing best. Whatever system you build for yourself, that's the best. And then focus on the volume candles, and I'll continue to ride the trend. And I hope you like this story, how I kind of picked one stock and then ride the trend, exit for safety, and then ride the same stock. Hope you like this video, and in the next video I'll come over and explain the next stock, how I ride the trends on position trades, and do follow me on this. Thank you very much.